Well, in the luxury real estate market, 2022 was one of tight supply and high price inflation. Seeing homes for sale were few and far between for even the most eager buyers. But as we shift gears into the new year, Sotheby's has released its latest assessment of Canada's luxury real estate market and sees opportunities on the horizon. Don Kottick is the CEO and president of Sotheby's International Realty Canada, and he joins us now. Thanks so much, Don.
Thanks, Jacqueline. Thanks for having me.
So in terms of luxury, when we're talking about luxury real estate, what are we really talking about here in Canada?
Well, basically, it depends on the market. As we go across the market, we have different price categories, but typically, just for sake of simplicity, we start the luxury at $1 million plus, and then we categorize after $4 million, and then ultra luxury falls in the $10 million plus class.
Okay, so in a city like Toronto, would that bar be a little bit higher? Because I mean, $1 million is almost, the average selling price.
Absolutely, yeah. We're probably, 1.6, in terms of a typical detached in that market as a starting point. So it's a little bit low, but it just gives us a good kind of indicator to work from on a national perspective.
So, Don, what did you see over the course of the pandemic, the past couple of years here? What were sales like? I mean, was it sort of following the same sort of trajectory as elsewhere in the country or elsewhere in the market in terms of that big run up in sales activity and then a real slowdown this year?
Yeah. I think we have to put everything into kind of context. We went through 2020, 2021, where we had a record kind of an anomaly number of years, and then when we got to 2022, obviously we started to see the market start off relatively strong. Vancouver was the first to kind of experience a slowdown, probably in Q1, and then the other markets tended to follow in Q2 in terms of slowing down. And then we had Calgary, which was a bit of an anomaly, and it kind of was an outlier in terms of what was happening. But during this time, over 2022, we had over 7 rate increases. So that was kind of a shock to our system, that we had all these rate increases. Nobody expected it. We had the cost of living continually going up. We had probably unprecedented government spending happening. And then we, pretty much had a price, like a unit adjustment, a price adjustment in the middle of 2022. And so that really carried us forward for the balance of the year. And then when we're coming into 2023, it's quite interesting because the market tends to be of the mind that there's probably going to be one further rate increase in January. And a lot of people are hoping that this is the final increase that will hit us. And I think once that happens, the fact that, we do have a shortage right now, we have a lot of buyers in the market, and this is right across the country. We're hearing this from, Victoria to Halifax, that their buyers are there. We just need the inventory. And so I think the market is looking for that green light that this is the end of the rate increases, and we hope it is. And that's where we're optimistic that the market will pick up. The other parameter we have to take into account is last year we had unprecedented amount of immigration. The number is, I think, approaching 1 million, and the federal government is talking of bringing about 1.5 million new immigrants over the next number of years. So all these immigrants are going to put more pressure on it, which is going to probably drive the activity of the market. So going into 2023, even though we're in a bit of a slowdown because of the lack of inventory, we're actually optimistic that the market is going to see a pickup, and we're probably looking at that pickup happening at the end of Q1 and into Q2.
I'm curious about the interest rate side of things, because when you get up to some of those, really expensive homes that you were talking about at the high end of the luxury market, how influential are interest rates when it comes to those buyers? Are they really, taking out a mortgage that large? I mean, and if they were, that would be quite the monthly payment, especially with those rates rates going higher. But is it also just economic environment? Because when we're thinking about those higher rates, and now, I mean, the possibility of a recession on the horizon, is it that as well that's, you know, being taken into consideration when you're thinking about both those buyers and sellers?
Yeah, I mean that's a great question, and one of the things that when we look at the market, we look at the market as one continuous spectrum. Like the different, you know, you have your first time buyer, you have your conventional market, your luxury market, your ultra luxury market, and they're all interconnected. But when you start to get into the luxury, the ultra luxury space, those buyers tend to be less impacted by interest rates. But but what happens is that we start to see as rates go up, they tend to be more discerning in terms of their selection of property. They won't make decisions as quickly as they did in heated markets, like when we were in 2021, people were making decisions. They were going after properties that may not have been their perfect fit. Now that the market is kind of set to find out that the homes they're buying in the luxury, ultra luxury plus have the amenities, have the services that they really want. So, you know, you're absolutely right. A lot of the luxury, ultra luxury buyers probably have the assets. They probably have the cash. It's just a matter of moving it around. They're less impacted, but it's really that may drive the freeing up of the inventory at the other levels that allow people to move up and transact.